Let me start you off with a little riddle. Let's say you have a lily pad pond and that it doubles every single day over the course of 30 days. And on that 30th day, the lily pad pond is 100% full. On what day is it 50% full? Some of you may say the 15th day, of course, because I said 50%. But in reality, it's actually that 29th day that the lily pad pond is 50% full. To me, that's a great comparison to the stock market and any sort of investing. It starts off small and then it gets bigger and bigger and bigger. According to Charles Schwab, the S&P 500 annually grows 9.2% over the past 10 years. That, to me, is a great investment and just kind of gives you an overall idea of how the stock market works. That is where a ton of people put a majority of their investing and put a majority of their money in life savings into that to watch it grow. If the S&P 500, which is a compilation of the US's top 500 publicly traded companies, and that grows at an average rate of 9.2% annually, what do you think the rest of the stock market would do? It would most likely follow that trend for the most part. Dave Ramsey is a super knowledgeable investor that loves to talk about finance. All he does day in and day out has a podcast and all sorts of different online courses that people can learn about and take. He is one of my mentors that I really enjoy watching and learning from him. He has many different tools that people can use to calculate how to get out of debt with their mortgages, how to use the debt snowball, which he calls it, to really get out of debt and find financial freedom. But one of his big things is teaching people how to grow their money. And one of his tools is a calculator, which I will show here, and it will tell you how much money you need to put in per month and over the course of how many years. And after, let's say, 50 years, $1,000 investment every single day using that Charles Schwab annual return of 9.2%, if you put in $1,000 a year over the course of 50 years with a return of 9.2%, that would come out to be just over $1 million. That is absolutely mind-blowing to me, and that's why investing piques my interest so much. It is a $50,000 investment stretched over the course of 50 years, turns out to be over $1 million. To me, investing is super important, especially when inflation is such a problem in the US economy and even globally. It will be in the news, probably much lower than your average daily news, but you can go and look for it. Inflation is a problem. If you don't really know what inflation is, it's really the value of the US dollar for us Americans. The US dollar, if you talk to your grandparents, they will talk to you about, oh, I could have bought that with a nickel, or whatever they may say. But that really is a good explanation and kind of real world application of inflation. 30, 40, 100 years ago, the US dollar really did carry a different value than now it does. So by investing that, you beat the average inflation rate. According to Forbes, the average inflation rate is 2% per year. So let's just say money was sitting in a savings account, really not getting any interest because the bank will take all of that interest and just use it for themselves and earn more money. Your savings account doesn't really provide you with a whole bunch of interest. That's why it's much better to put a larger sum of money in investments like the stock market or investments maybe like real estate to grow that money and beat the rate of inflation. Otherwise, you're pretty much just losing money. Real estate, I mentioned, is another good investment, but it's probably a lot harder to get into for most people. Real estate requires tens of thousands of dollars and a lot of knowledge that probably the average investor doesn't have. But with enough work, effort, and just reading up on it, you can really find that real good niche for real estate. It may come later in life for a lot of us other people, average Joes, who don't come from real estate guru families, but it is a great way to get a return on investment. With real estate, the way that you get a return on investment is whether it's from your monthly rental income or just the appreciation of the house. If you were to go on Zillow and just search up your home, you would see a chart down close to the bottom showing the value of your house in 2008, which probably would be super low because that's when there's a giant crash in the market, to just this giant growth to what we have today. So that is another way that you can invest in real estate. To me, you have real estate and stock investing as the two main and easy ways to get into. I said that real estate's not that easy to get into, but it is a main way that tons and tons of people invest daily and every single year. Some people may be afraid of the stock market because of trends or how volatile it may be. That is true, but also at the same time, it's not. If you look at trends over the course of the past 10s and 20 years, you will see that the stock market always tends to go up. Yes, there may be years that it goes down, but over time, it trends to go up. That's why people should never really invest for short term if they are not very risk averse. All of these different ways to invest are super important in our financial freedoms as young investors. And the younger that we start, the more that our money can grow, like the lily pads. Thank you.